everyone. Welcome to another Facebook Live. I am Maria Mejia, and with me is,
Well, I think I'll be David Pataki today. How's everyone doing?
that I don't know why, but like one of those scenes from The Office came to mind about the identity theft, and you're like, I want to be David today. So, anyways,
Yeah. Confession, I've not
confession.
gotten into the office. I couldn't get past the main dude there.
It's so fun. I've watched all of them. I'm guilty. Anyways, we're not here to talk about The Office. We are here to talk about tip number 3 on what you can do with your tax refund. So, Mr. David Pizzacchi, do you remember what tip number 3 was?
Yes, I believe, if I'm not mistaken, let me think. No, it is paying off past due bills or um, credit cards.
Your debts, yes.
Your debts.
So the first two were about, saving for yourself and saving for your kids. Number 3 is paying your debts off. So the main one being, any past due bills that you might have, those final notices type bills. Hopefully you're not getting those, but if you do, those should definitely be on the priority list of yours for what you can do with your refund. Some other things that you can think of, like David said, is to pay off your credit card. Credit card debt is a slippery slope for most people because, sometimes we forget that, you use your credit card, that's actual cash that you need to pay back to the credit card company. So if you have multiple credit card bills, you need to create a strategy on, okay, which one has the highest debt, which one has the highest interest rate, and what should the game plan be to paying those off.
Yeah, like credit cards are a funny thing, like when you first get them, most people, of course, are saying, I'm going to be responsible, right? And then they put some, they put some gas on there, maybe some groceries, the bill comes in, they pay it off, they pay it off right away. And then this happens for a couple months, and then you have a slower month, or maybe it's Christmas time, then you put a little bit more money on there than you would really that you can really pay off. So now all of a sudden you're not paying the full amount off on your credit card. So you're just kind of like, maybe I'll put $300-400 on this month. And you do that the next month, but you're actually putting more money on there than you're paying off. And what happens is, at some point you look back and now you've got, $9,622 on your credit card. But the good thing is that the bill comes in and you see minimum payment is $75 or $73.22.
That
And
seems reasonable.
you go, I can handle that. But,
But
no, go ahead. You take over.
yeah, there's a little trick to that. Even though it might say the minimum payments, $73 and some change, really, what are you paying off with that minimum balance? Essentially, you are only paying off the interest or
With a
any
tiny
fees.
bit of the principal.
Yeah, and maybe $5 of the principal. So in reality,
No, maybe 6.
or maybe $6. But in the end, when you finally pay it off, 3, 4, or 5 years down the road, you've essentially paid double for everything on your credit card due to that interest. All because you're like, I can make that minimum payment.
It's funny because, I try to be frugal in when I'm spending or buying stuff. But, the funny thing is if you go out there and you buy something that's on sale, let's say you save yourself, $20, $30, whatever it is you put on your credit card. But if you're not paying that off, eventually the interest on that, whatever it is,
Yeah.
right? Maybe it was $100, you paid 74 and you saved $30. You go, oh, that's great. But eventually within a short period of time, you will have spent more than the $30 that you saved on interest only.
Yep, so it's not like that money's going, to that mom and pop shop that you purchased those things from or the grocery store down the road. It's going to that credit card company, and they're the ones making that profit. So you're, like David said, you're losing money. In essence, you really haven't saved anything. You're just kind of shifting where that money is being spent. And with multiple credit cards comes a larger hit on your credit score. And as we know, being adults, the credit score is like the holy grail for anybody who wants to lend us money, whether that be for, personal reasons or business reasons. They're going to be looking at your score and saying, okay, you have 3 credit cards open, all of them have an open balance. You're paying the minimum payments for, 2 of them. The third one you're okay paying off. They'll be like, well, you essentially can't handle what you have right now, so we're not going to lend you any money, or we're going to lend you like really, really small amount. So being able to pay off that credit card sooner, it will essentially help you increase your credit score.
Yep. You know, like the credit score is a huge thing as well. They're actually okay from my understanding. They're okay if you're carrying a certain balance, but it's when you're in the maximum. I don't know if it's over 60% or whatever it is, but definitely if it's over 80% of your credit card, you're carrying that balance. That is no good. They're looking at that as a huge risk. But just consider again, like, I mean, if you have a $10,000 credit limit on there and you're at 80%, you're at $8,000. So every month you're paying $50 ish a month just for your interest. So if you don't do any, if you don't spend any, if you just pay the minimum charge and you leave the $8,000, sorry, the minimum payment over a year, that's $50 a month you're going to be paying, which is $600 for the year that you are going to just give to the credit card companies. And that's why they want to give them to you, because they know people carry balances and they're going to pay the interest.
Yep, they're kind of banking on you needing to pay the interest only. So something that you can do if you have multiple credit cards that are open, figure out which one has the lowest interest amount, the lowest rate for you, and try and move all your debt to that one if possible, and then start paying that off, either a large chunks at a time. Create a payment plan in your head or on paper.
Paper's
saying,
better.
Paper better. That's what he said it, so it's better. So make a plan on how to, pay that off. If you're not able to kind of transfer the debt to another card, well, then pay off the largest amount first. That way, that higher, it might be the same interest amount, but as we know in mathematics, if you multiply 1% by a larger number, you're going to be owing a larger amount. So pay off the largest balance if that's kind of the next step to do.
Well, it's just to swing back to what we're talking about here is, like, you're going to get a refund, right? You're getting the refund. How much is it? Whatever, maybe it's $600, $700, $1,500, whatever it is. Take a look at what bills you can pay. Obviously, if you've got your bills looked after, then that's fine. But what better use what is the best use of that money? Because like we said, like let's say it's $2,000. Maybe the interest isn't too bad on that. So let's say maybe it's $25 a month on interest. But if you paid that off, you're actually saving yourself that $25 a month, right? Which is, what is that? 50. That's over a couple $100 for the year on just interest payments alone. So you're actually translating that $2,000 refund, you're putting it onto your credit card, you're actually saving yourself over $200.
Yep, that exponential growth of savings there for you. You might not have, the physical cash on you, but that's cash you don't have to spend. That's tied up elsewhere. Something else you can think of, if possible, pay off any of your student loans, or pay off any mortgages if you can, give a little extra for the year on that. And look at other lines of credit that you might have that you might be able to pay off. Even if you're, a business owner, maybe you can use that refund to pay off your business debts as well. So look at the different places, different people, institutions that you might owe money, and figure out what would be the best kind of your return on your personal investment for that.
It's always good to look at that. Most people look at it as a bonus, like we've said this in the past, Facebook Lives. You get the money in the bank. All right, let's go
Put your money.
Buy that 72-inch or 80-inch TV. They put that in there, and like, do you really need that? I mean, it's all up to you, of course, But we want to look at the longer run. Like what makes the most sense for you? Would you rather pay down some debt? Would you rather pay a little bit more on the mortgage, get that paid off a little quicker, more on the credit cards, or do you want to go out there and spend it on a 80-inch TV?
Especially if part of that 80-inch TV is going onto the credit card. You've spent your refund and then you're adding to your debt. So be smart, be wise about where your refund is going.
Yep, take a look at the big picture. Always the investing in the future. We talked about RSPs, we talked about the RESPs for the education savings. So that's actually seeing a long-term return. And that's the same thing we're talking about today as well. If you pay off your debts, you're actually, because all your debts have interest, so it's actually saving you money. It's money that you don't have to pay for down the road. So you can take that $2,000 and it kind of turns into $2,400 because you didn't have to pay that extra $400 in interest, for example.
So the lesson for today is take your refund and pay off any of your either past due debts or debts that are coming up, such as your credit card. And thanks again, everyone, for watching our Facebook Live. It's always great to be able to share tips and tricks with you all. And remember to like, share, and subscribe. Share this information with anyone who you think might benefit from it, because we're here to share our knowledge with you.
And we're doing what we can to help. So if there's any questions, just let us know in the comments or reach out to us in all the different ways that you can. Until next time.
We'll see ya.